All right, let's dive a little bit deeper into the action right now with our markets reporters. Abigail, you're standing by. What are you watching?
Well, Romaine, I'm thinking about that weakness that you all are talking about relative to the major stock indexes here in the U.S. and especially the S&P 500. Let's check in on a chart that we've looked at a few times over the last few weeks. We see this massive range of uncertainty, a battle between the bulls and the bears over the last year and a half over trade concerns, plus the Fed, up and down, up and down. And of course, we have this year's big rally, that bit of consolidation in May. Interestingly, though, a previously bearish pattern seems to be morphing into a bigger bearish pattern. However, ultimately, that could take the S&P 500 to 3060. It is actually confirmed for those levels right now. In the very near term, it looks like a little drop could be in store, but net, Sarah, it looks like the bulls will probably try to come charging perhaps into that G20 or out of the G20, but the end of the year is of question if we do in fact see this bigger bearish pattern come into play. Lots to keep an eye on technically, Sarah.
Absolutely lots to keep an eye on. And one thing that we are watching this morning was the Conference Board data for consumer confidence, which fell to the lowest since September of 2017. Now, BMO actually pointed out that the number missed estimates by the most since 2009. But along with consumer confidence, they also released numbers on where Americans expect stocks to go, higher or lower. And we did see a large increase in the share that expects stock prices to decrease over the next month or so. Notably, for the first time since January, the bears actually outweigh the bulls, and those who expect stocks to fall rose to 33%. Now, that is a 10% jump from last month after falling for 4 straight months. So just yet another negative sentiment point to add to the list, particularly after that last Bank of America fund manager survey. Emma?
Sarah, I've been looking at that proposed $63 billion mega merger between AbbVie and Allergan. It's caused some big moves for both those stocks in the market today. Certainly for AbbVie, having its worst day as a public company, falling 16% on the news and really staying there throughout the session. Investors probably remembering how its last deal died a very quick death. Allergan, by contrast, rising above 25%. Now, Wall Street analysts have been split on the efficacy of the deal, but what it shouldn't detract from is the huge boom we're seeing in M&A here in the U.S. 93 deals worth some $617 billion have been completed, proposed, or are pending this quarter. That doesn't include Allergan and AbbVie. It means quarterly deal volume and deal value is at a record high, and there are many M&A watchers who expect that we will see more of this given the relative low cost of debt financing and the amount of cash on S&P 500 companies' balance sheets.